Bismillahirrahmanirrahim. In this video, we will be covering about and discussing the chapter number 2 of Kaplan study text. Uh, it's obviously about business documentation, and business documentation is really talking about the fact that what are the different types of documents flowing in an organization, what for they're used, when they are used, and why they are used. So, in introduction slide, we will be looking at documents and why they are used. Documents record business transaction accurately and provide a legal record for financial accountability in audit trials. If you look, if you look, you are in a you have a company and you have an equipment, suppose like a computer, you have that. So what's the record, what's your legal evidence that you own that asset? That are those documents, that are those receipts that you have you have that stating that you have purchased this computer at this date from at this cost. And also they are really useful in audit trials. Audit trials like when external audit or internal audit comes and really wants to verify and look out for the uh, physical assets and find out the documents, and they would like to watch those assets in order to find the relevant documents. So documents are really of uh, importance in this area. What they do, ensure proper authorization, internal controls, and clear communication between all business parties involved in transactions. You know, it's a system, it's a chain of uh, transaction. Like if you start from a purchase requisition, then it moves to purchase order, then receive the delivery note, then followed by invoice. So it's a chain, and it can also be used for authorization purposes. Like when we look at the purchase requisition form, it acts as a control, it acts as a permission in order to enter into a specific transaction. This business documentation supports financial accounting, auditing process, dispute resolution, and regulatory compliance requirement. So what are these? Financial accounting. We said that accounting is a system that generally gets those information for the relevant users out of transactions by capturing them, by identifying them, by classifying them. So it support their financial accounting, auditing process I mentioned earlier, dispute resolution. In the previous video, we talked about the reasons about the keeping a record. Uh, it really acts as an evidence or as a proof and can really be handy in the dispute resolution. Like suppose one of your customer has ordered 10 items of a specific product, and you deliver that, and then he comes and want to pay for 5 and saying that he has only ordered 5. If you have the purchase order, sales order from the customer, so you can really provide the proof that you are right in this specific area. So uh, in this section, types of business documentation. There are numerous types. There are numerous documents flowing in the organization, in numerous activities. Like if you go to sales, there are numerous uh, accounting documents. If you look at the purchases, so do there are lots of types of types of documents. So, cash transaction documents, credit transaction procedures and documents, sell invoices, in purchase order, delivery, and good receive notes. In each of them, we will be covering each of them in its number. Firstly, is cash transaction documents, receipts. What is a receipt? So ideally, we have seen receipts a lot of time when we are generally going and paying in a supermarket uh, for a beverage or whatever it is at the point of sales or the counter. When we show them the product, they request the payment. When we put or pay the amount, they give us a receipt. So what's a receipt? It's a issued as a proof of payment, is a proof as an evidence of payment that I have received this money in exchange of the goods that I have transferred for you, and confirms the transaction has taken place in the amount paid by the customer. So it states that I have received this money in consideration or in exchange of the goods that I have transferred, and the transaction is done. Tail rule. Tail rule, it's obviously a lot of times is used in the supermarkets, that point of sales. Whenever we receive a money, we pay that in the safe, we pay that in the till, in the box. And what about we are also writing a description in our book or a tail roll, a list that this amount for this item, this amount for this item. So tail roll is a continuous record of all sales transaction process at the point of sales, used for daily reconciliation and audit purposes. And at the end of the day, we will be counting our safe, our box of money, our cash box, and also the tail roll, that how much is in on my record and how much actual cash do I have. Delivery note and payment receipt. Delivery note is a document whenever a customer requests for goods, and then through sell order, and then we process that order and sends those goods. Beside this delivery of goods, we also send a document by the name of delivery note. It includes the quantity of the goods, the quality, the number of the goods that has been delivered to the customer. And the receipt confirms payment has been made and received. Payment received from the customer, that we have received the amount. So similar to the receipts by itself. Credit transaction. Credit transaction is not so similar to cash transaction. In cash transaction, we have just the tail roll and the receipts. But in the credit transaction, there is a lot of documents, not just the tail roll, not uh, just invoice. In case we have a lot of documents. And let's first see the credit transaction. In our previous video, we have discussed that a credit transaction is a transaction that goods are transferred, the consideration is transferred, but the payment occurs at a later date. And at each stage of this transaction, it requires careful documentation and approval at every stage of the process. So the customer's order is on one stage. We deliver the goods is another stage. Then comes the period time, it's another stage. So it has a numerous stages, and it's more somehow complicated than the cash, which is a straightforward. Internal requisition and purchase order. Internal acquisition is a form filled by the departments whenever they are in need of an asset, a machinery, or an equipment. They fill out a form that stating they are in need of such a equipment, and they require a permission from the superior management in order to uh, grant them in order to buy that, uh, to make that expenditure. Was purchase order. Whenever the permission in order to purchase has been taken out from the superior management, then comes the purchase order. Purchase order, we will also discuss in further, but it's a document sent to the supplier requesting for goods, that I want to order this amount of goods, this quantity in this condition and at this price. Supplier invoice and credit control. Supplier invoice, whenever we say we send an order, the supplier processes it, and then he sends the delivery note that makes the delivery and accompanies it with the delivery note. Delivery note we discussed is a document showing that this amount, this quality, that products has been delivered to the customer. So when we receive that from a supplier, then we are likely to get an invoice. What's invoice? The supplier issues an invoice. For what reason? As a request for payment. Now the supplier says, "I've transferred the good, and now you pay me. You pay me this amount in this much time." So it's a document requesting for payment. And what's credit control? Credit control here, it's not a document. It's a procedures followed in order to ensure that there is an ongoing mentoring, approval, and timely settlement of outstanding balance. Simply, how much I owe to this supplier, how much I owe to that supplier, and when I should pay them, and I should ensure in order to pay them on timely basis. Processing a credit sale. Now, credit sale, uh, we actually are familiar with credit sale. Credit and sale is a exchange of goods and services for money. So credit sale is a sale that we transfer, we provide the service, and then we receive at a later date. So what are the documents flowing out in such a transaction? Firstly, is the customer places an order on credit terms. Customer send us a sell order saying that I need this much at this much quantity and at this price. Then comes the delivery note accompanies go to confirm shipment. Delivery note we then whenever we receive the order, the sell order, we process it and we give the order to the warehouse department in order to deliver this amount of good to that customer at that address. And whenever he ships the goods or he gives the good to the deliver the goods to the customer, he also give it a delivery note. A delivery note is an evidence, is a proof, is a document that it states that the customer is provided with this amount of goods at such a quality, and the customer should verify it and sign it in order to approve that he has received that. Customer makes payment and sends remittance advice to confirm details. So after that we have sent our delivery note, after that we directly send our invoice. Now we say we have delivered the goods, now pay me. We request for payment through a document called invoice, and further details we will be in the next slide. Sell invoice is explained. Firstly, let's cover the invoice by itself. It has a face like this. If you zoom in through this visual, you see invoice. So what is invoice? Invoice is a document requesting for payment, simply like that. Whenever a seller, someone who sold something to you, either it may be goods or services, whenever they transferred those goods or provided those services, now they want their payment and they want those payment through invoice. So invoice comes in two types. One is sell invoice and one is purchase invoice, and really depends on the perspective of the one of each scenario. Like if I'm purchasing, when I receive the invoice from the supplier, I see it's a purchase invoice. And when I'm selling to the customer and send invoice from my side, I'm saying it's a sell invoice. So purchase invoice is sent, uh, purchase invoice is from the perspective of the customer, and sell invoice is from the perspective of the seller. So which is include less goods or services. It states that I've transferred this amount of goods, and I sold it to you, sell it through you this much quantity, like 10 pens and price, and each pen is priced at $10. So include customer business details, invoice date, number. Invoice is sequentially numbered, like invoice number 10, 11, 12, 13. So it has a number, and it includes customer name, address, or something like that. And then date is also a really important uh, point of the invoice. Then specify payment terms. Payment terms are what, like in how much period of time you are going to pay me, and this serve as a formal request for payment from the buyer perspective, from the buyer. Now the buyer has received the goods, so he should pay that. Support account receivable in audit trials. Now, through these invoices, we are increasing our income, our revenue, and as from here it's on a credit, we are also adjusting our asset balances. I mean, the account receivable, which we will further study in the chapter number 3, double entry. And the invoice should be must be accurate, and you should promptly update delivery. As said, after we made the delivery note, to reissue the delivery, then consequently we issue our invoice. Now, purchase requisition versus purchase order. I discussed it before also, but still we will give a slight review. What's purchase requisition? It's an internal document. It's inside the business. It's what? It's a request for permission from superior manager that I'm making such an expense raised by someone who is in need. and reviewed, and if either permissible, it's authorized by the manager. And it's the first document or the first step in the procurement process, the permission taking. Then comes the purchase order. Whenever I took the permission, then I go to the supplier and tells him, I don't go by myself. I send this purchase order, and I state that I need this thing at this amount, and I'm paying you at this price. So issued after requisition is approved, and it specify goods quantity in price and creates a legal commitment. Now I'm committed to purchase from you. Then comes delivery note. Here I've got a really great visual. Here you see this track and this deliver goods to the customer. When it deliver, it also gives them a document, and the document name is delivery note. It states what uh, uh, it states was that I have delivered this amount of goods to you at this condition, and you sign that in order to confirm that you have received this good. So this visual is really good visual. It's a great thing. Then it comes a good receive note. Once I've received the delivery note from the buyer perspective, this is what the buyer is making. It's an internal document. It's made internally, and it's for the purpose of internal. It's made. As per the delivery note, I make a note or a document by the name of Good Receive Note or GRN, famous by GRN. And it's an internal document, and it's confirming receipts to the warehouse that our warehouse is now added with 10 more of equipment, 10 more, like suppose in a stationery business, it may be 10,000 of paper sheet. So it's for record purposes that supports inventory accuracy, uh, and subsequently it will result in a great and accurate correct accounting records. And delivery note, I don't think that is nothing more to explain here. Payment and remittance advance, we will either, if we look at from a purchaser point of view, when we have bought uh, numerously from our supplier, and now we want to pay him, like suppose in a month, in the first of month, I deliver, I request or order goods for 1000 of value, then at the 10th I ordered 2000, and on 15 I ordered 3000 more. So and 20 I make a payment of 1500. So supplier may think from which invoice it is. So I'm advising him. I'm making a creating a document by the name of remittance advice. States which payment, my payment is for which invoice. This 1500 is for the 1000 on first date, and 500 for the remaining on the fifth of the month or something like that. So remittance advice is a notification sent by the buyer confirming payment details. It's literally so shows that which payment is for which invoice. Payment. Payment is what? Payment is giving money or paying money for either cash, or I'm sorry, for either you buying of your equipments or buying for uh, resale purposes. So payment is actual transfer of funds from the buyer to seller in respect of goods or services they are received. Statement of account. Statement of account, if you look, also give a view to this visual, it's a statement that shows your transaction and summarizes it for a period of time. So let's read it out. Send periodically to customers summarizing all transaction. Periodically means in a specific period, the supplier send it to customers that you have made this much amount of transaction, you order this much, you return this much, you paid this much, and at the end of the month, this statement is made usually monthly. And at the end of the month, you owe me this much amount of money. You should pay me this amount of money. What it less invoices, like the amount you increased your the goods that you have purchased from me, payments, uh, it reduces the statement of account. Credit notes are returns that some of the goods may be faulty or this may be not as per the order, so it returned. And outstanding balance means that how much you are payable to me. And it also is a helpful document for customer also in order to notify them that they are payable to me this amount. So, and it support credit control and cash flow management for the business. Some of my customers may be owning a lot of money from for toward me. Is like some may own me 5,000 and my credit limit or credit limit is something like 2,000 and they are overdue. So it notifies me. It alerts me that this customer has exceeded its limit and it should be controlled. Return credit notes and debit notes. Whenever they goods are delivered to customers, it's not always that the customer will agree and take the goods. There may be some faulty goods, their condition may be not good, there may be excessive goods that the customer may not want, and they are will request the supplier, the one who sell those goods, the seller, to reduce amount in invoice. So it's reduced by another document named credit note. Credit note is a document issued in order to reduce part of the amount or cancel all of the amount of invoice. Debit note, in contrast, this is an issued to supplier. It's issued by the purchaser. To whom? To supplier, to the seller. In order, it's a request to either to do what? To increase the amount of invoice or to correct it. And both documents must state why they have made. Why means reason. What were the reason for either reduction or addition of the invoice? So these documents should be documented in order to maintain accounting records. So, credit and debit notes link back to original invoice for traceability. So, if we raise credit notes and debit notes, we also uh, less that invoice number that it should be traced back is for that invoice. That invoice is cancelled. That invoice is partly cancelled. So, and the final point why we account for returns is that ensure financial statements reflect true balances at all times. So your income is not the one that you first originally did it. You should account for returns. Like suppose you show your revenue for 10 million, but 4 million has been returned, so you should uh, account for that return, and that return will effectively reduce your revenue to 6 million, and surely it will result in true balances at all times. Document retention policy is concerned with the fact that we should retain or keep business documents to a period of time. And it's influenced by either the government policies or regulation laws, or either business policy or the company policy that how much time it should they should keep the record. And it's why we keep these records. Firstly, is maintain documentation securely for legal and audit purposes. Uh, so, if you look at an equipment, you have a computer with yourself, but how can we identify the fact that you are the owner of the computer? So if you don't have record, you are not able to prove that you are the owner of it. So for legal purposes, it's always vital to have records. Store original or authorized copies with restricted access. Ensure easy retrieval and maintain reliable backups to support audit and compliance review. Now, in this part, the meaning of this part is that those documents should be kept safely. It should be in a place that there is no damage to them, to their security. They are not deteriorated and wrecked or totaled. Then the main point, as I mentioned, that there are two influences on it. One is the regulations and laws for it, and the other is company policy that it says. And also, the company should be really able to the point to train their staff on proper document handling, confidentiality, and secure disposal of records when retention periods expire. So the customer, the Employees of the business may not they should not misuse it, or when they are handling they should not lose the documents or result any loss of these documents. Data protection and business documentation. Data protection is concerned with the personal data of individuals held with the business, maybe their name, their addresses, their bank details, or something like that. They are all personal data. So, data protection, how we can protect it from misuse and misbehave by individuals, either inside or outside from the organization. So, protect personal and sensitive information in all business document. This is a duty. Use secure storage system with restricted access control. These data should be kept in areas there is a restricted access, so not everyone can use it, can access it. Comply with data protection laws. If there is any government regulation, you should comply it. You should put adherence to them. Only retain personal data as long as necessary for business purpose. So whenever you are keeping this data, there should be a valid reason that you are in need of it. Train staff on confidentiality, data handling, and data document security. As in the previous slide, the staff should not misuse the data, the confidentiality of the data. Data handling, when they are processing the data, they should not lose or damage the data. And document security, as when they are in disposal or something like that, there should be care should be taken there. Implement clear policies for data breaches and document disposal. Now, the businesses should have clear policies to how manage these data and document disposal whenever they are not in need of it. With this, we are coming to conclusion of the chapter number 2, part 1. We have decided to divide it in two parts because of the fact it's too long that we could not cover it in one video. So it would become so much lengthy and lengthy, so that's why we made it the decision that we should divide it into. In conclusion, we have a document flow. So document flow states which the order of the documents, which documents come first, which come second, third, or last. Firstly, we have like if you are in a purchase, in a purchase scenario, we will have a purchase requisition first, followed by purchase order, then delivery note, then sell invoice, then payment, and consequently, if it's in need of a remittance advice. So, if you found this video helpful, try to hit a like button, comment, and share that it reaches other people also. And in next video, we will be probably covering the part two of the chapter number two of business documentation, Kaplan text kit, Kaplan study text. So bye bye. Take care.